WTI crude oil futures dropped by 2.1% on Friday, closing at $68 per barrel, the lowest level since June 2023. The decline comes as OPEC Plus grappled with market concerns over global supply and demand dynamics. The group decided to delay its planned production increase of 180,000 barrels per day until December, a move that would have introduced an additional 2.2 million barrels per day into the market through the end of next year. Adding to the bearish sentiment, recent economic data from China and the US highlighted weaknesses in their manufacturing sectors, sparking fears of declining oil demand. The possibility of increased oil supply from Libya, as political factions there approach an agreement, also contributed to the downward pressure. However, a surprise drawdown in U.S. crude inventories, which saw a reduction of 6.9 million barrels, far exceeding the expected 1.1 million barrel decrease, offered some support. Despite this, WTI prices still recorded an 8% drop for the week, marking their worst performance since October. Given the current technical setup and fundamental drivers, crude oil prices could see a brief recovery if they manage to hold above the current support levels. However, the broader trend remains bearish, and further declines towards $65 or even lower levels are possible in the near term. Traders should watch for any developments in global economic indicators, particularly those related to China and central bank policies, as these could significantly influence the market's direction. WTI crude oil prices have recently fallen to new lows below important $70 support, with key support level identified at $66. This drop follows a breakdown from a symmetrical triangle pattern, suggesting further declines could be on the horizon. If the support level at $66 fails to hold, the next significant support zone lies around $64, with the potential for prices to dip even lower towards $60. Please like and comment to support the channel. See you in the next one.